Welcome back to Rockstock Channel. It is Thursday, May 30th, which is my partner Rodney Hooper's birthday. And we are excited to have, for the first time, Anna Cabral-Gardner, CEO of Sigma Lithium. I first met Anna during Sigma's IPO capital raise in 2018, when I learned that she and I both graduated from Columbia Business School, but in very different years. Anna had spent 20 years as a banker at Merrill Lynch, Goldman Sachs, and Credit Suisse in Brazil, New York, in London, while I was helping raise the profile of Robert Friedland's original Ivanhoe mines in Mongolia in the 2000s. As anyone who's ever heard Anna speak, she has no doubt learned from this world's best mining promoter. A mother of 7 children, Anna is a globetrotter who can be seen at the same conferences as Robert in the Middle East and elsewhere. She's won many Brazilian awards for the major success story that Sigma has become, not just in the lithium industry, but for mining development stories of any type. The IPO that took place in 2018 was around $20 million at $2. Since then, Sigma has never done a down round. They raised another $18 million during the tough COVID times at $2.15. Then again in February 2021, $40 million at a higher valuation. And then a big raise of 137 million Canadian in December 2021, which was cornerstoned by a $64 million investment from BlackRock in London. Sigma subsequently listed, or around that time, had listed on NASDAQ, not just on the Toronto Venture Exchange. The NASDAQ listing happened in September 2021. The company is now covered by BofA, BMO, Cormark, Canaccord, target prices anywhere in the US $30 to $35 range. The stock price is now about $16 US, 21 Canadian. Sigma has been a textbook case, of the re-rating potential as an illiquid market cap. Just full disclosure, RK Equity has never been an advisor to Sigma, nor have I owned a share in Sigma until 2 weeks ago after listening to Anna during her earnings call. I was shown the IPO, but the stock was always so illiquid until they listed on NASDAQ. But it's become a textbook case of the re-rating potential of an illiquid, market cap as they hit milestones and gain international attention. Sigma is now very, traded, highly liquid, with institutional investor support, not just from BlackRock. Just also to remind you to like and comment on this video and subscribe to Rockstock Channel and click the notification bell to ensure you catch all of our videos when they're released. You could also email us at rockstockchannel@rkequity.com and subscribe to the Lithium Ion Bull newsletter by registering your email at rkequity.com.
Great. Anna, congrats, you're up and running and commissioned phase 1. You're now looking at the second phase. The capex from your latest presentation is just over $100 million for 250,000 tons of spodumene concentrate, which is incredibly cost efficient. No doubt linked to the DMS, but that is very cost efficient relative to your capex of phase 1. Can you please just elaborate on how it's possible to keep it that low for phase 2, and if there is any existing phase 1 infrastructure that you're leveraging off?
There's absolutely existing infrastructure. Basically, what we've done is we built common infrastructure to support street production lines. And that had a cost all in of about $40 million US. Each line roughly costs about $100 million. So it is essentially a disciplined, phased out approach to getting to a company that will produce 750,000 tons of lithium concentrate. Instead of doing it all at once, we went line by line by line. However, the big deployment was at zero when we deployed the $40 million. So the first line that we have up and running, it's going to the 10th shipment, works like a clock, 22,000 tons a month, commissioned to design capacity, beautiful. We're going to replicate it into a second line and into a third line. So each line is $100 million. So the difference in cost is essentially the fact that we're leaning on the original infrastructure. What is that? Substations, the water treatment station, the inbound water. We treat inbound water because we use sewage inbound. So we treat that water for us. All of the ancillary structures that you would need to run an operation like this do not need to be replicated twice over, like changing rooms, offices, all of it's there. So that's what we're basically saving when it comes to phase 2 costs.
Okay, great. And in terms of funding it, you got trade finance, just to refresh for
Yeah,
listeners.
we're fully funded because we are now the world's 6th largest producer. We're the 4th largest industrial mining complex in the world, which means we are a producer of scale. We trail behind Alborg SQM, the big two, and then the 3 Australians, Arcadia, Minres, and Pilbara, and then there's us. If you do it in LCE equivalent, the 2.7 translates into 37,000 tons LCE, so we're right there with them, month in, month out. So that gives us access to all the universe of bank financing, regular bank financing for low-risk producers, exporters in this country and globally. So we do have roughly 100 million of trade finance lines sitting in our treasury today, and they get replenished with every shipment. So it's our ongoing operational regular funding that we are using to build this phase 2. And it's straightforward construction, given that this 100 million project management based deployment, it gets deployed every month. So it isn't as if we would need the money up front. We have it. This is also our revenue generation, our cash generation, the organic growth, capital generation of the company. So it's a pretty digestible CapEx, let's put it that way, being here after 12 years, as Howard was pointing out. He's seen the path we travel. And to have this kind of cash flow, to have translated the discipline we applied on the build, on the CapEx, into the actual operations for almost a year now. We haven't even completed a year of start production. We are already at the 2nd lowest cost in the world, audited there, which means discipline is our hallmark here in terms of how I manage this company.
And given that you are now profitable at current spodumene concentrate prices, and you've got, I think it was at the last quarterly, just under 110 million in cash, is it clear, Sigma's clear intention is you won't need to raise any equity funding in order to complete phase 2 construction?
No, not at all. Profit is an accounting number. We generate this concentrate price would allow us to grow and thrive. We're the 2nd lowest cost producer in the world. Our ability to generate gross margins and cash are fantastic. The profit, though, remember, is what I said earlier. We have all the commissioning expenses and the commissioning costs. They're still being percolating through our financials because it's an accounting measure, generating this much cash flow in our first year, which literally just confounds people because typically you don't see this much cash flow in a first year. So ultimately here, what we have is a clearer balance sheet, but as we've shown quarter after quarter after quarter, as we step further and further away from production, the numbers, the actual cash generation numbers become quite clear. We haven't even been given a chance to show quarters of pure operational expenses because, again, we just sold our first shipment in July of 23. And that is the success story, how quickly we ramped to design capacity. We actually did that under headwinds of a declining price, made no difference in our capital structure because, again, the organic cash generation is extremely robust. We are a very low-cost producer. Bank lines came in because by the 6th shipment of 22,000 tons, clockwork reliability, every 35 days to ship this material on a boat, we were classed as a bona fide producer. And the beauty of this industry is that this is a very low-risk industry when it comes to selling your product and to secure a client. It's different than selling consumer goods, right? So once you're in business in this industry and you gain your market share, of which you keep gaining, you basically a very low risk credit for the banks. And that gave us access to ample bank financing. So this is basically how we pull this off. And as far as the raise, one thing you're forgetting, we have incredible shareholders. So one of our shareholders, for example, Synergy, extended a credit line in 2022, 100 million. So we would have this cushion of capital for commissioning, for finalizing phase one construction, and all the work we've done. So again, we were already tapping the discipline of CapEx, already meant non-dilution as early as December 22, when we got $100 million from a large shareholder in the Middle East. The access to capital is in the consistent delivery of what we say, which is obsession, draconian disciplines on cost, dilution, capital structure. As a large shareholder, we really are focused on honoring the trust and the returns, respecting the returns of all equity shareholders, right? So it's a non-dilution business, basically.
Yes, and just so we've seen the first phase and the effective LME price that you've achieved. What's the proposed sell route for this next phase in terms of how you're going to sell the material?
It just keeps on getting better. We initiated our commercial relationship with the market in the traditional way. We partnered with a very large trading company, and we developed commercial strategies together. And that was a fantastic strategy. And it did help us tremendously, especially during the headwinds of the market in the fourth quarter of last year and the first quarter of this year. Why? Because in addition to the trade finance lines that we could back up with shipment, we had access to their balance sheet where they would shorten the working capital cycle. So we would not use our trade lines for their entire duration, meaning from producing, from lithium plant gate to customer refinery door, there's a period. We would not be financing that entire period. We would lean on our trading partner the moment the material was shipped in Brazil. That made an enormous difference in being able to pull this off in our first year, because as you can see, we were still dealing with, all the experience that you have to go through when you commission, which for anyone who's gone through this, it's extremely daunting. Commissioning and keeping up your nameplate production levels. That is a weight in your balance sheet and in that cash that we generate. Having the trading partner made all the difference. And then you evolve, because once the product was in the market, in the battery materials industry, it became clear that the product is better metallurgically, chemically, and physically for just 3 reasons: large particles, high purity, and low contaminants like mica. So ultimately, this package brings 20 to 30% measurable cost savings to our clients. So there's value in use. And so that was the moment when we evolved further commercially. So this month we shipped to LX/LG the full boat, 22,000 tons, because there has been enough track record of trying and understanding what the material did for their batteries, for their cathodes, so that they felt comfortable to engage directly with us. And then once you have a direct relation to a cathode maker, battery maker, commercially, we were able to achieve what we believe to be our stable pricing fixed floating formula of 9% off the lithium hydroxide quoted seaborne, right? Meaning LME.
And then, Anna, you've got a projected mineral resource estimate of 150 million tons. Do you have any sort of guidance for us as to when you'll be able to produce that kind of a number as an official sort of NR 43-101?
We now think like a producer. We just validated 77 million tons of reserves, which with 2 lines gives us a project life of 25 years. And that's how we will operate, meaning we will deploy capital. And again, the discipline. We'll deploy capital in bringing forth this resource into reserves as we build each phase so that we're always with 25 million of project life under our belts. So it's a reverse equation now. In other words, as we're no longer a developer, and that matters a lot less than delivering 22,000 tons, 22,000 and a half tons on a ship every month, the focus now is it's there, 25 years. This is what the longevity needs to be for an average project, for an average company, given that that's visible cash flow. So we won't waste capital there until it's time to build the third line, which will be next year. And then we'll take reserves, mineral reserves up again, so that on a back mathematical basis, we keep the 25 years project life. It's a smart way of deploying capital in exploration and development and in feasibility.
So just on that, you've outlined a strategy to reach 770,000 tons of capacity in 2020. Are there any limitations on infrastructure, et cetera, or logistics to going beyond that once you've reached that capacity?
Not at all. And I think that's pure strategy. What is the golden standard for a company that a major producer? You need to reach 100,000 tons LCE. So that's the number I've been hearing from the end users, from the battery makers. When you think about, you are a major when you hit 100,000 tons of LCE and you have over 20 years of project life. That's what we are. So we're doing this, though, one step at a time, because, again, to Howard's point, to this draconian discipline on equity dilution, we are doing this at the speed that has to be done. We can accelerate some of these paths. It's construction, but we stick to construction budgets. We stick to construction timelines. We've done it over and over again. We deliver what we promise, and here we are. We have a very clear path of very low risk, because we've already lived through the risk of developing, building, first build, what have you, of getting to 100,000 tons LCE, which is the 766,000 tons, which is just the third line. So we're doing second line this year, ramp to capacity, third line, 2026, there we are. And that's a very good number. Now, what's next? Most likely, actually, most certainly, a unit of lithium chemical intermediates, which is a basic chemistry flow sheet. And again, Brazil is a country that never deindustrialized. We have one of the largest auto industries in the world here. We don't have the brands, but the cars are built here. That's a big, important point, because 25% of the GDP, 30% of GDP comes from industry, which is a very high number for economy. It's essentially a country that has all that infrastructure, the human capital, the chemical industry knowledge base, the energy industry knowledge base, steel makers. All of these industries left some countries in the West, have not left Brazil because of active industrial policy. And now we're the beneficiaries of that. This month, we just won the Industrial Company of the Year, because we have a 1 square kilometer of industry, and we will continue down this industrial trajectory. And again, we are delivering industrial materials like the greatest competitors in the world. If you think about what we do, being the concentrate, we have competitors literally all over, including in China, who embraced us. It's a market that completely embraced us, right? Half of our clientele is in China, half of our clientele is not in China. We deliver that kind of product with that kind of quality, with that kind of cost efficiency, and with the Western sustainability, traceability, environmental standards. We're very proud of what we built, as you can see.
Indeed. Can you just please discuss your experience as a company operating in Brazil, and particularly your region, how supportive local government is, the local communities? How's that gone?
Well, Brazil, it's interesting because it's one of the major mining workhorses of the world for most of base metals. Unfortunately for lithium, investors or no entrepreneurs were willing to take the risk, the geological risk, because one of the issues we had is that there wasn't a history of mapping geologically the lithium, actually globally, but in Brazil in particular. Given that we were neighbors with Chile and Argentina, most likely they would say, oh, go look for this in the neighborhood of South America. So we took some risk, but we had calculated risk when I purchased this in 2012 with my partner, and he was doing the work. Ultimately here, what was it? We traced back this resource to Sansagualia, which was the big bang of lithium in Western Australia. From Sansagualia, Greenbushes came out, Talison came out. Talison was one Sansagualia, Pilbara, Wajna, Altura. So we tracked that back, and that's how I purchased. So we had a great pedigree, right? When you go to Australia, you talk to the Talison hands, the old Talison guys, the Talison originals, they all know about this property. We didn't have volumes, delineation, nothing. So we set out to do that work. That was risk, pure risk. But we did a calculated risk because he had a pedigree. And then as lithium, Brazil wasn't known because no one would take risk of this nature. What we have done, we actually always have taken this territorial approach. Why? Because Brazil is a great mining jurisdiction. It's actually one of the greatest in the world because of iron ore. There's a mining code here that's etched in stone with the Napoleonic code of the law, plus all the jurisprudence of case law together for over 60 years. Every single situation, there's a precedent. So it's very easy, straightforward in courts to solve disputes because of the precedent set by iron ore. Brazil is the second largest iron ore province in the world. It hosts the largest iron ore company in the world, which is Vale. So when you think about how great this country is for this industry, what we've done, we built on it. We built on it again on another strength of the country, which is industry. We have a mine and we have an industry. And the industrial human capital, the industrial knowledge, the industrial resources, all of it is also here. We have the fourth largest cleaning products industry in the world, the fifth largest auto industry in the world. Every large industry, base industry, has Brazil's top 5, top 10 because of the massive domestic consumption market. It's 230 million people here. So this industrial track record of the country, plus the legal certainty of the country being one of the greatest mining provinces in the world, together create a very benign, a very user-friendly, a very simple, straightforward operating environment. And as a Brazilian, I'm extremely proud of it. And we've been the beneficiaries of that because, we see something from the inside, which from the outside wouldn't seem that obvious. Now we have the greatest neighbors in the Lithium Valley. We got from Rio Tinto and Vale and Latin Resources, and everyone's there. But we broke through that, we pioneered to develop that province, to develop that territory. And now all of them have come and purchased properties in the neighborhoods. It's a very popular neighborhood now.
Ana, before Rodney has a couple more questions, but I'm just thinking about this and just the evolution of, lithium and your comparisons to Western Australia and a comparison of you to some of the entrepreneurs and personalities that are in Western Australia, like Chris Ellison, founder, owner, owns 16% of the company, and Gina Reinhard. So last year you had this strategic process and it was all about, I think I heard you say that A10's it's private equity. You weren't meant to necessarily be an operator, you're going to sell, but what's to prevent you from, and there are other, Assor is a private equity group in South Africa that owns mines and they're a major shareholder and put out a bid for Atlantic. Why not, just hold on to Sigma, run it for cash flow and maybe acquire some of those other companies in Lithium Valley or, move downstream as Pilbara has? Well, what's your thoughts on that strategically?
That's a great question. No, we'll stay. We're here now. I think investors believe we demonstrated that we have a very, very resilient, disciplined, and execution-oriented management team. We delivered this company into production. I took over a year ago a construction site that had all the issues of a construction site. We put the ship back on track. We borrow from our shareholders, so we have the trust of our shareholders. So with that, when we still didn't have revenues, we were able to take a construction site that was commissioning a crusher when I took over as CEO, running all of it, right, into the world's 6th largest producer and the world's 4th largest industrial mining complex. So we have an incredible team. And I lean on my team heavily because I do believe I'm a very inclusive, democratic manager. I run this company like best-in-class technology businesses are run. Operating technology businesses is a flat organization. It's run with speed. It's an entirely different managerial style from the basic materials industry, which helps us attract talent in droves because people enjoy working here. They love working here. There's a sense of purpose in what we do, and that's very translatable to the site and to what they see, right? So ultimately, this is it. We developed the management culture. We developed the culture where we've shown we're excellent at it. We broke every record of this industry in terms of discipline on construction, timeline to construction, budget to construction, delivery to ramp up, delivery over smooth ramp up, ramping up to capacity. And then what do we do next? We go downstream up until that point where we are excellent in it. And by excellent, the same way we do produce the highest quality, the best lithium concentrate in the world here. And that's not a qualitative affirmation. That's a chemical, physical. We deliver measurable value in use of the order of 20 to 30% to the clients. That's why we're so sought after as a product. And that's what allows us to become a direct seller to battery makers immediately, physically, within the first year. We're translating that excellence to once we get to producing lithium sulfate here, we will produce the best lithium sulfate in the world. It will be the quintuple zero all over again. We're going to bring in the sustainability aspect and the low cost and the competitive cost. So all of those attributes get translated all the way to downstream to where we are. And importantly, and that's key, it's often forgotten that this is Brazil. It's an emerging market. So building here is as effective as building in China. And that's a significant advantage. Brazil has this beauty of being a Western country, Western friend, Western strategic ally of the US, China partner, China trading partner. We navigate East and West. We have a great relationship with the Middle East. So we can do it as an emerging market. So the vision is we will be in Brazil for lithium rock what Indonesia is for nickel, because it's the same characteristics. Difference though, 88% of our scope 2 power matrix of the country is already renewable. It's a beautiful legacy we inherited from this country. So it allows us to deliver industrial materials that are zero carbon for tiny costs. Power here is cheap, abundant, and inexpensive. And it bodes really well with the green industry, which they call China +1. We will be the +1 in lithium. Fact, because costs and environmental sustainability.
So, Anna, in your view, is the demand for spodumene concentrate and long-term offtake agreements still robust in this market?
Yeah, no, absolutely. What we're forgetting is the demand coming from China, right? So sometimes you look at the EV growth and the lithium demand growth just with a lens that comes from the West. And there's growth there. It's single digits growth. The growth in the West has been 8% in one market, 7% in another. The real engine of growth had been Europe, and that slowed down. Europe is the second largest market to China. But China is slated, it hit 50% penetration for the first time in history in April, which was lost in everyone. For us who come from this industry from 2012, And even in 2016, I had to explain electrical cars to people. We come from a place where penetration was less than 2%. And all of a sudden, China, half the cars are green plates. It's a marvel to see. And that is the real engine of growth. So today, China had grown 32%, global 21%, because the China growth gets diluted down. But one needs to understand that that's an end user market there. China isn't because there's a policy direction to electrify those cities for the execution of the development plans of the country, which goes through rapid urbanization. So that has been entirely non-discussed in the West, which just look at it from a Western lens. So when you think about demand, specifically numbers, okay, the bear case demand numbers for this year are 1.2 million tons of LC, depending who you ask. If you add up the 6 largest players in the world, which give you the traceability up to the midpoint of the cost curve, reliable supply, you don't get to 650,000 tons of product. So you still have a little gap. And then where is that going to come from? That's going to come from Africa. You have 2 very good mines there that were very ramped up very quickly by Huayu Cobalt, and high cost material from China itself. So it's interesting because you still, despite our success, despite Pilbara's and Albemarle's and SQM's expansions and success, then continue investment. It's a winner takes all. So this 6 will take the brunt of, we will be the workhorses of the industry, fact, but we're not nearly big enough to get to the numbers of, let's say, 2025, where it goes to 1.4 on the bear case. What will you need? You will need 6 Sigmas. So where are they? They're nowhere. We're talking about a year. If the numbers in China keep on clocking like they've been clocking, despite what happens in the West, you have enough of a growth profile to actually take up all the low cost to midpoint cost material and some, which creates that healthy dynamic in price stabilization. The price won't go down. The price tested the low once in February and never even came back from it, because the market, when the buyers came out of Lunar New Year, the market was, we can't sell at these prices. There isn't enough for you. All the product that could be sold is taken. So they had to edge back towards the high end of the cost curve again. So it's interesting because over time, and again, I've been here 12 years, what I've seen, and I told this the other day to an oil and gas investor, there's a clear trend where the low point of the cycle today was the dream case of the previous cycle. And how do you remember that? Had someone told you in 2019 that we would be at $15,000, $14,000 hydroxide, and everybody would be crying wolf over a bear market, you would have laughed. So here's where we are. The point, though, is that that discipline got lost on developers who thought, oh, I can go and have a $1,100 cash cost for concentrate because there's a new normal. That's no such thing. But if you had kept the discipline that we've kept, where, okay, my plant cost will be $370 at the gate, and that's a small deviation from where it was before, and whatever comes in price is a huge excess return bonus, you're smiling. This is where we are. We kept the same cost discipline that allowed us to raise capital, develop and thrive in the worst bear market in lithium, which was 1918, 1920, with all those bankruptcies. We survived that, but we never lost the draconian spirit that got us here. So what we see in the market today is basically access restrictions for us. This is what was lost. It isn't an issue with demand. Supply isn't rare, so there's supply at a price. The question becomes the workhorses, the 6 grades, the crowd that was supposed to stick to mid to low end of the cost curve, some of them didn't maintain that discipline and it jumped over to the high end of the cost curve. And so that discipline was lost. This is what gives way to people complaining about these bear prices, which had that discipline been maintained, it would have been just fine. Capital discipline was lost. You saw big players doing light recaps. You saw all sorts of what we call, we're veterans of the industry, right? In financing, capital raising, and private equity and investing. These are clear hallmarks in discipline of an industry getting too comfortable. And we see it in every industry over and over again, not just natural resources. So from time to time, you need that sort of reality check just to put industry back on a discipline course. We are one of the ones, we're surviving and thriving, we're gaining share. Don't see it as a demand issue. We see it as a supply cost discipline issue. That's what's lacking, not demand.
Okay, welcome back. This is part 2 of our interview with Anna. She just flew to Rio, so it's now the afternoon of Thursday, May 30th. There were a couple more questions that I wanted to ask, but the first one was, what music should we pick as the teaser and to represent what is Sigma Lithium? Anna, what would you choose?
Well, Sigma Lithium is the company, you're saying.
Video.
Depends. If it's for me, it would be Demand, obviously.
Demand
And
from
if
Taylor Swift?
from Taylor Swift, obviously.
Why obviously?
Because I am the most unlikely person to have achieved and delivered what we have delivered in this industry, which we hope to be a testament that one should look at Theo pick with blind auditions, just like the New York Philharmonic now picks musicians. In other words, you pick the best for the job, regardless of gender, accent, look. Are you capable of driving a business, driving a growth engine, and executing and delivering on every promise? And when a woman says that, it's met with a lot of discredit. If I were a veteran CEO of the mining industry, people wouldn't have doubted me the way they doubted us. And we were the one that finished the race. But you know that we are the first company in this industry to deliver scale in 6 years since 2018. The last one was Pilbara. So since Pilbara hatched, it's like the turtle race. We are the only turtle that got through the ocean with the Trinity, right? Traceability, sustainability, low cost, and scale. Billions of dollars, all this hype in lithium from 18 to 23. No one's done it, which is actually shocking when you put it that way.
Taylor Swift has blazed a similar path in a different industry.
Exactly. She's a fellow change maker. CNBC put a list together of change makers, and what she's done, she's taken control of her music rights in a very clever manner. And again, you wouldn't expect a woman to turn an industry upside down the way she's done it. So she was accomplished because she reinvented the rules of her industry.
Yeah, that's great. So Anna, I want to build on where we last left off. You were talking about the team that you built, and also a very significant component of the narrative of Sigma late last year and into early this year was the process that you had underway, and there were various bidders rumored. You have called off that strategic process as per your Q1 earnings call. But as I was listening to you and what you just said about being a change maker and what you said earlier, your connectivity to the country and a whole host of things, I remember hearing back a while back, he said, A10, we're a private equity fund. We're not supposed to be operators. We have a buy date, et cetera. But you're not KKR. You're not Apollo with external capital that must sell. So you can be a family office. So why wouldn't your attitude now be like, Gina Reinhardt in Australia, or Andrew Forrest in Australia, or Chris Ellison, all in Western Australia, who are patriots in their own right for their country? The lithium and spodumene industry is extremely young. You have defined what you pioneered with Lithium Valley and that NASDAQ, construct that you put together last year. And you were also making reference to, Brazil being welcoming of China. If you look at Ganfeng, founder operated, Mr. Li and Xiao Shen. So why not? Why sell this? Why not, grow it organically? Run it for cash flow, pay dividends to yourself the way Chris Ellison pays dividends to himself, but also through acquisitions, Gina and Chris Ellison are very active, and there's Lithium Ionic, there's Atlas, there's Latin Resources. You want to go downstream to sulfate in a similar way that Pilbara, and so why not partner with a hydroxide plant like a POSCO? Is this part of your mindset now?
You've lived through this with us. You know how we think. You got it. You're a visionary in your own right. I saw you growing your business. That is the idea. We're very good at it. Where we've shown is that we're very good at managing companies to KPIs and to results and creating a culture that is unique to this industry. We have a technology culture in a base industry company. What distinguishes Sigma, and this was told us by the biggest clients we've had, the best and brightest in the industry, is this sense of cohesiveness that we're in this together for a purpose. What's the purpose? First was the pride that we delivered what we said we were from the get-go in 2016. We reinvented part of our business here, which is the mining part of the business. This country was a country where mining wasn't done in line or in harmony with the environment. It's a country that saw two terrible tailing dam disasters. And we set out to eradicate tailing dams and to demonstrate that it was actually accretive to shareholders over the lifetime of a project to not have a tailing dam and to make the capital investment upfront. So we changed the conversation in the industry around tailing dams completely. And this is why we have been hailed in the country as a symbol of this 21st century mining company. So that's in mining. In industry, what we've done, again, in lithium, same, but the common thread, same denominator, is around environmental impact, around delivering the most sustainable product, and around delivering something that was aligned with the ethos of that car. We moved away from flotation. The initial decision on dense media separation was it doesn't have chemicals, it has less water, is a less risky process, and it does the work well enough, because flotation was also not a process that was specifically designed for lithium. So the recoveries were bench lab recovery and not real world recovery. And we were living through the lessons of the Australians commissioning flotation and demonstrating that bench pilot is different than the real world. So we chose the dense media separation, and we made a lot of technological improvements and investments in P&D. We changed the circuit altogether to the point of now it's rare to find a DMS, a spodumene or a rock-based lithium project that is going to be industrialized into pre-chemical concentrate that hails flotation, because flotation became a villain in the industry. Because ultimately, we demonstrated the DMS could be good enough that would deliver what you need. And in our case, given the heavy investments we made, we actually delivering the best product in the world. We have liberation and we have recoveries at DMS at plant level. They are the envy of the flotation world. And that sets back to the third module, which was the innovation model, where we dry stack and reuse all the water. So we delivered an end-to-end cohesive solution with a purpose that was innovative from the get-go. If I had known how hard it was, and I remember Ken Brisden in a podcast on Pilbara saying people underestimate the undertaking that it is to take a company from greenfield to operations, all the complexity of this very multifaceted organism. If I had known what I would go through executing this at the beginning, probably I would have sold this company earlier. Like, I wouldn't even embark on a construction. It is a monstrous effort. But we've de-risked it through the worst part now. We've gone through the geological de-risking all the way through IPO. We've gone to the process flow sheet de-risking through feasibility. We've gone to the construction de-risking. We've gone through the innovation de-risking. We've gone through the commissioning de-risking, and here we are. We have this incredible business. Yes, we are not planning to sell. We love this. And we see what we've become in this country for an industry that we love so much, and for a region we love so much. And how have we managed to place Brazil at the center of the conversations of this multipolarized world where we lower the temperature on something that's abundant? Warmongering over lithium doesn't belong in the 21st century because it's abundant to begin with. What is in short supply is good execution, not and good execution is in short supply in everything. So what we've shown is don't focus on trying to politicize something that abundant. Elon Musk, everyone says that. What's short is discipline, execution, cost focus, burn rate focus. Is that discipline from venture technology investing, which we brought to this? That's cost. And that we have, and that we're good at. So we're doing it again, and we're going to do it again. And then when do we stop? We don't plan to grow inorganically through acquisitions in the Lithium Valley. Why not? That is the core of the Lithium Valley's ethos. We want more. We want to build the Pilangogora of Brazil at Vale do Jequitinhonha. We want more companies. We want a lot of them, right? What we do envision, though, is that we will again be the pioneers on downstream processing. Yes, we are. And we can do that because it's what I was saying earlier. We are in an industrial country. So I got chemical engineers. I got the whole apparatus necessary, gas, chemical engineers, logistics, power, knowledge, equipment, local equipment. I mean, I'm not sure if you know, 70% of my plant built locally with equipment. And those who weren't, because there are others and we're making such heavy investments, are setting up shop, like Metal Autotech set up a factory in Belo Horizonte just to supply us, same as the pumps company. So we are tracking this industry down to Brazil. It's an industrialized economy, as most emerging economies never really deindustrialized because we had the advantages of being an emerging economy, differently than the West, which had some of the disadvantages and lost industry to the emerging economies. So this industry is what we're going to keep building on because now we're in this industrial operation. And we have another team on the plant. So we have two companies. We have a mine and the plant. And that plant team will be incremented into a chemicals plant team and we'll go intermediate chemicals, which is the logic. And again, we will build the best intermediate chemicals in the world. Why? We are going to deliver zero carbon intermediates. Where else in the world could we do this?
When you say intermediates, are you thinking about going all the way down? Just sulfate?
Lithium sulfate. Sulfate. Because the sulfate is what do I like about sulfate? And I studied, there are a lot of things about...
A lot of people have talked about sulfate. There's AVZ in the DRC, was talking about it back in the day because it was such long distance to transport, only 6% concentrate. But no market yet has developed for that. There's no, we don't know what the pricing of sulfate is. Please comment about how you see the market evolving, because you also made some comments during your quarterly call with comparisons to iron ore and comparisons to copper and how things are priced.
Yes.
Another point related to that is most spodumene is tied up in long-term contracts or vertically integrated. So Pilbara has 3 major customers. It's all going to China. There's not available tonnage in the spot market. Wodgina, Minres and Albemarle, it's all vertically integrated. But your tons can go anywhere. And you're saying you may want to go down to sulfate, but there's also a number of kind of merchant converters in Europe, the US, or Canada. Your spodumene can go anywhere, but it sounds like you're saying you want to actually make sulfate, but who would convert the sulfate?
Okay,
where?
That is the point. And look, we were the first ones to talk about sulfate. It's just that we never got the attention. And again, the discredit, right? So what's the point of sulfate? Why is it so important? It's not a volume play. I can truck my material to port for $50. So I don't need to do it. I have a fantastic business of concentrate with the logistics I've got. I have roads. I'm in an industrial state. It's not a necessity for me. It's a necessity for the West. Why? And here's the point. Strategically, we're building scale. I'm now half of Pilbara in production. Next year, I'll be the size of Pilbara in production. The following year, Pilbara is growing. So we're probably going to be similar because they are not stopping where they are, and nor am I. So we have a third line. With 3 lines, that's in my case, 766,000 tons of concentrate. Am I relinquishing the concentrate business? Absolutely not. Why do we have the luxury of choosing our customers and shipping our boat at leisure? We deliver the best lithium concentrate in the world, which is not priced correctly. Why? It's an immature pricing mechanism for lithium concentrate, completely immature. It's natural. Lithium is a baby industry. And what are the elements that drive value in use for customers? Particle size, purity, precedence. Iron ore trades on particle size. Vale achieves a 30% premium for lump ore. Copper trades on purity. These 2 elements that create my value to my clients, which is again chemically measurable. You need 7.2 tons of my material to do a ton of the highest purity hydroxide. You would need 9 to 10 of competitors, sometimes 10 and a half, to do the same thing. So they save on feedstock. I don't get paid for much of that. I get paid out of that 30% premium. I'm lucky if I get 10. I've been getting 10% of that. So it's a win-win. So this is why I said China is a very smart, self-reliant market. When they see something that's better, they embrace it. So we've been embraced by that market. China's many industries, many people, many players, our clients understood the value of what we have to offer in a sense where it's a partnership relationship. They take some of that gain. I take some of the gain. We are partners in success. Same has been happening with the Western customers, now notably the South Koreans. It's a win-win commercial relationship. Even though it's a spot pricing, it's not really a spot pricing because we also been partners when we embrace the formula. It's a fixed floating formula. It's 9% of the price of the hydroxide because that embeds what we believe to be this value cap. Why do we get it and nobody else does? Our product is better. You can measure it. It's not an opinion. It's a chemical, mathematical certainty. These are numbers, unarguable with. So with that fantastic product, I could be shipping today 3 boats, meaning I could have 3 lines. I have just 1. So I go 1. But again, the discipline precludes me from doing all at once because we won't be diluted. So how do we go about this? With the same humility, with the same discipline, with the same conservatism as ever, as from where we didn't have any revenues, meaning money runs out and you hold on to your cash dearly and you spend it thriftily. How do we go about this? One phase. And then with 2 cash flows, I do a 3rd phase. In the 3rd phase, I may not even have to borrow. With the benefit of 3-line cash flows, I could go about the intermediate chemicals. Why stop at sulfates? That's your question. Many reasons. Nothing to do with the exact logistics, none of that. What is the main issue today and this is what's fascinating about how big this industry is. When you talk about refining, what is the main impediment to refining? It's waste. Every ton of lithium hydroxide generates 12 tons of toxic sulfuric acid loaded waste. Aluminum sulfate and the whole laundry list, I can give you the entire name of them. Now, what does China do? This waste is so toxic, it cannot sit on soil. It has to be immediately transported into a recycling facility or a reuse facility, upcycling, let's call it that way. This is what China got right. This was why the industry went to China to begin with. What does it take for this waste to be upcycled? An industry that can receive it and reuse it. Where? Concrete binding. You need a construction industry big enough, subdeveloped enough, meaning cement-based construction industry, to absorb all that waste. This goes into detergents. So you need a large cleaning products industry, right? Now, not all countries in the West, they're putting themselves out to do refining, have that domestic industry to absorb it. So when you talk to people about waste, they look at you with this quizzical look, what waste? That is the issue. So once we solve the waste equation in a sustainable manner, you upcycle it, then you ship in chemicals. And then you create a chemical to chemical supply chain. What can we do in Brazil? We're a third world country, so our entire construction industry is heavily concrete cement based. So that concrete binding, we need a lot of it. There's plenty of demand for that waste, including some of my shareholders, one of which is one of the largest cement producers in this country. Cleaning products, the same. One of the family office, the largest producer of cleaning detergents in the country. So that's it. So I got the waste equation solved. So that's the big kahuna of the industry. And then I go about the rest of the industrial process. I stop at ion exchange crystallization. So all I'm doing here is calcination, which is where I capture the particle side cost advantage for myself. Instead of giving out the 20, 30%, the large particles behave very efficiently with heat transfers in the kilns. So I use less gas. So there's more efficiency there. That's where the coarseness manifests itself into margins. And then you move into an acid acid wash leach. And that's where you generate the toxicity of the waste and all of that waste. And then we recycle the waste. And then you would go ion exchange crystallizers, depending on the path. That we leave up to specialty chemical experts all over the world. China, Western Europe, US, all over. So it's chem to chem, stopped in the middle. Where does the purity manifest itself? In a crystallizer. As you know, potassium oxide, huge impediment to purity, to achieving the degree of certification to 14 metals in the periodic table that all the top 4 large battery makers in the world would require for high nickel. So ultimately, I leave the purity for the client. It continues to be a win-win, but I take care of the waste and I bank on some of the coarseness, which is the iron ore-like type property. So with that win-win, I can tell you today, if I had lithium sulfate, I could sell my entire production to hydroxide producers in China with not direct, meaning to my end user client. My end user battery maker client would actually, the same way, they would toll it into the current tolling arrangements because it is the best product. How we can make it zero carbon too. How's natural gas instead of coal gas in the kilns, clean power, zero waste. So I would end up with a number so low, like best in class, because I deliver zero carbon. I bring no baggage from the raw material. I need to basically deliver 2.5 tons of CO2 for each 7 tons of the product in carbon credits. So we can go all the way. So what would we be delivering? The zero carbon, zero waste, zero dirty power, lithium sulfate, the 000 lithium sulfate. It doesn't get better than that.
How soon before you think you could be producing this sulfate?
Look, one step at a time. You build a house by the foundation. We just did phase 1. We're doing phase 2. We're going to do phase 3. Now, phase 3, and then again, you'll be a matter of my cash flows, capital structure. Look, a sulfate facility in Brazil will go for under $200 million, right? Because it is a kiln and an acid wash. It is not a complex industrial crystallizer plus ion exchange plus the specialty chemical facility.
I understand it. It's a lot simpler than making hydroxide.
It's half the process with the cheaper portions of the industrial equipment. In a country where you got natural gas coming from offshore, because we have built it on a shore, industrial facilities over there, it's pretty straightforward. It's gorgeous. Gorgeous days. So it's pretty straightforward. It's pretty straightforward. So it's not rocket science. And I'm not setting out without humility to do something that we wouldn't be good at. In other words, what we're doing is basic chemistry. It's not specialty chemistry. What is the intent? Is to build the China +1. We are going to be the +1, meaning as Indonesia is doing what it's doing for nickel, we will be doing the same for lithium. In other words, we are the plus one. And plus one with that caveat, where would you put all that waste in Western Europe? Where would you put all that waste in the US? Where would you put all that waste in Australia or anywhere in Japan, in Korea? You don't have that ability to absorb that waste. So it is not feasible from an environmental perspective, because what you're going to ship, we ship. That's what's being done, but not scalable. So we would be delivering a chemical that is crossing those environmental standards because it's 000.
Okay. I want to add just a few more questions because we recorded an hour earlier, so I don't want to make this like super duper long, and editing it down always takes a lot of time. But you've talked about Brazil's just geopolitically important. It could straddle China and the West. I sent you an article from Bloomberg just the other day that says Chinese EV giants hammered by Biden tariff are welcome in Brazil. So it said,
everybody's welcome here. Our automakers are all German and American, and we don't have a Brazilian automaker. The Germans have been here for 70 years. The Americans have been here for 40. Fiat came when they were still Italian. We welcome everybody. Everybody's here. The Chinese were the ones that were missing. They just joined the party.
Yeah, but Brazil is the 5th or 6th biggest auto manufacturer in the world, and also
that's why it's the biggest manufacturer, because look, these import tariffs, Mr. President just put it now, are the way to build industry. I believe in industrial policy. That's how this country has won. We've had 100% tariffs on auto for as long as I remember. And that's why we built the Brazilian auto industry, which doesn't have a single Brazilian brand. You want to sell into this market, you make it here, you create jobs here, you employ Brazilians. And there's
you're welcoming the Chinese. It's not clear that America, although Trump said if he's elected, he doesn't want, exports coming in through Mexico. But if the Chinese were BYD or CATL were to build factories in America, that would be a different story. This article was saying that manufacturing in Brazil would enable the Chinese to sell tariff-free to the other Latin American countries.
I don't think look, I can't comment on tariffs. This is policy. I don't make policy. I'm a developmental economist. All I can comment on tariffs is a general comment of what I've seen in Brazil. The reason why Brazil didn't deindustrialize completely, and the reason why we have these jobs I use, this human capital I use today and I count on, is that this country has always done active industrial policy, and that is good policy. I believe in protecting industry. I do. And this is why we have an industrial colossus in this country. We have a giant market, and therefore we have a very protected industry, which is incredibly efficient. We deliver the best aircraft in the world, right? So it's not just base. We have probably the best manufacturer of commercial aircraft here called Embraer, which Boeing tried to buy last year. We have the best lithium plant in the world in Brazil, which I didn't need protectionism because I'm an exporter, but that was built with talent that hails from these technology centers. And they just exist because they've been employed in other industrial facilities. So this year, I was elected Industrial Person of the Year because I'm a big industry champion. Car making in Brazil is made by Fiat when it was Spanish, Volkswagen, GM, all of them are here. And they're super welcome. They thrived in the country. But why did they have to come to this country? Because if they wanted to tap into our massive domestic market, they had to make the cars here. And there's nothing wrong with it. So the Chinese coming to Brazil. So they're just another group of EV makers. There's joining a pretty large foreign contingent of car makers in this country. And they're going to be welcome just the way we welcome the Americans. We welcome the Germans. We welcome anyone. You can welcome the Japanese. The Toyotas here as well. They all make cars here. It is a fantastic thing.
Anna, you were going back to your customers. You said your customers would toll the sulfate. I guess your last shipment went to LG or LX International. It's not clear. Pilbara has announced they have 3 major offtakes. You know who their buyers are. Who are ultimately your customers?
But what we try to do is to divide the product in the way the market is divided. We haven't been able to do it on a shipment by shipment basis. This last shipment went entirely to the West, to LG. So what we are going to try to strive for is to have a replication. Half the end users will be China, half the end users will be Westerners. And remember, we do not refine. We don't have the shareholding ties. We don't have the legacy of shareholding offtakes and requests on our product. We're completely free to do what we want with our product. That's an advantage. The capital discipline gave us freedom and independence. So the world is a blueprint for us, and we own our product. So what we try to do is to keep it fair, is to reflect what this country is, welcoming. Everyone is welcome. So when you think about the conversion stack, because there isn't conversion outside of China, and there isn't, right? Albemarle's facilities are in China, Livent facilities are in China. The American companies are converting in China themselves. Now, what do we strive for? The best accounts receivable possible. That's how I get these trade lines. How do we do this? We try to sell to end users, meaning we end up with the big checkbook. That's the part that owns the product. How do they make the product into usable form? Is their arrangement with their tolling partners. And we don't meddle in there. So we deliver the product on an accounts receivable basis, on a transactional basis to fantastic counterparties and users. In this case, now is Alex, which is LG International, right? In the previous one is being Glencore. So the accounts receivable is A, credit quality, A, rating. That's how we got that, because we have an incredible accounts receivable. Now, what the end users do to transform the product into final chemical is their tolling arrangements. So that's what we needed. That's been the strategy since Mitsui's day, since the beginning. We devised this with the Japanese, meaning we're going to be locking ourselves up with the end users, which is the same caliber of clients all of our peers have. And once we locked in with the same caliber of clients that the refiners have, the Ganfengs, Albemarle, SQN, all of the greats of the industry have, it's a whiteboard, meaning whatever I deliver to them that meet this criteria of environmental sustainability, meaning ultra high standards of environmental sustainability and product perfection on purity, will be purchased. And then the tolling arrangement is a matter of what is it that the tolling will be between them. Price formation is a function of who your end user is, right? And we did just show that to the world with price formation formula using refined product as a base. So what would I believe this could become? A bigger percentage of the hydroxide formula, right? We would just grab more of that value because all of a sudden I'm condensed to begin with. I'm condensing 9 tons into 1 ton. I'm doing the agglomeration of 7 to 1 because now 1 ton is 9%. But if I'm delivering something that has 7 tons in there, you start with 7 times. So 1 ton is 9%. So if I have 7 tons embedded into this, it's 7 times 9. That's the starting point. And then you start building from there. So it's very straightforward when you take the collaborative partnership, commercial type of win-win approach we took in price of the end chemical, because it's just a matter of negotiating what's going to be the percentage within it that we're going to capture. And again, I didn't invent this. The same way I learned most of my lessons by standing on the shoulder of the great Australians, like we said. I watched Ken, I watched Galaxy, I watched, all of them there, Minres, Chris, I watched them all. Here, we're building from copper concentrate. Copper concentrate is 25% of refined copper. So that's what it's priced. So we're looking at this aluminum copper concentrate, these twin industries where one cannot be without the other, and thinking what could be a blueprint for creating a lithium sulfate market. In the meantime, 24, 25, 26, we're going to be delivering the very best lithium concentrate in the world.
Okay. I just want to get to maybe pricing or comments on pricing. SQM is going gangbusters after Q4, or when prices fell, they were like inventorying, but now they're back at, producing full volumes. Pilbara is producing full volumes. I think IGO talked about, Greenbushes producing full volume. So just after the crash in price in January, at this stabilization going gangbusters. So we've leveled off on price. Albemarle are basically saying it's still too low to justify incentive pricing needed for, let's say, North American integrated, downstream. They think, 1,500, or 2,000 spodumene is necessary, or 20,000, lithium carbonate. What's your view on pricing, in the near term and next year? I know you don't care. You could be profitable, but you do care because obviously you'll make a lot more cash flow. So what's your read? Your China demand is good. North America and Europe are have slowed. What's your overall view on?
You made an excellent point, and we got to decouple the pricing conversation into two. First is free chemical concentrate, and the other one is refined products, right? Because refined products are much more a function of the makeup of the market between nickel rich or LFP, and then you have the whole carbon industry just waiting in the wings in industry in China to come in. But let's stay to concentrate, which is what I do. It's what I observe. It goes back to my point earlier. It doesn't surprise me at all. Everyone's going at full capacity. We have always gone full capacity to the extent we could. We deliver every gram we produce, and I could be delivering 2 more boats. During the trough, very few companies had the resilience, meaning the cost competitiveness, to be profitable in that environment, and we did. We were fine because our cost is actually very low. The numbers that were being presented to us as price were actually perfectly fine. And they were actually quasi-bull market prices if you were to take a 2019 perspective. And we never engorged costs in indiscipline during the bull market years. We always stayed lean and mean, always preparing for the worst. And when we ended up with the headwinds right on our first year of commissioning, we were ready because we had that lean and mean structure. Just look at our first quarter. Now, when you look at the industry as a whole, that hasn't been the case. So when you look at the 6 largest producers, ALB, SQM, Arcadium, Minres, Pilbara, and Sigma, we end up at the midpoint of the cost curve. So then what happens? If demand stays where it is today, you have a gap that will need to be covered with either untraceable, unsustainable product from Africa or with high cost product from China. It's simple. It's just look at the benchmark curve. So the gap still exists. So now that the price has shown a sign of stabilization, everyone else going full capacity is a necessity because the gap is there. And the gap will be met. And so if you have the ability to earn returns into the current price environment, go ahead and place your product because somebody else will. So it's an occupation of market share, which we were doing. We occupied a lot of market share. No one else was doing. We did, right? We just didn't have more product. And that's why we're so confident. Okay, let's double and let's just put a triple on the plan just for good measure because we could occupy all that market share. So that's a sign of winner takes all in this industry. This 6 will get bigger. The big will get bigger, period. And it's a sign of a gap that builds increasingly because where are the next 6? Where are the next low cost, large scale guys with quick to market timetables?
Anna, it sounds like you're saying the high cost producers, and unsustainable like lepidolite in China, are the high end of the cost curve is what you're saying. So by implication, though, their marginal cost should be where the price is, right?
You have 2 categories. You have the high cost producers who are also unsustainable, but they're high cost producers, so they're not out of the curve. They're out of the curve because they're just high cost producers. And you have lepidolites and all kinds of costs, right? But they're there, meaning we're not going to be without, right?
At what price do you think that they are if they're setting the, because that's where the price should ultimately rise to?
is a function of what you just said. How much do we, at the mid to low end of the cost curve, put into the market because they get the balance? So then the balance, you go filling in, you go navigating the cost curve up. Then you have Africa. What's Africa doing? And they have work to do. And I believe in Africa. They need to work on human rights, social sustainability, and environmental sustainability. You cannot have 800 men crammed in 10 quarters to build a plant. That's disrespect of human rights. That doesn't belong in the supply chain. And I'm very we just Google it, right? So this is the issue. It doesn't pass muster with a Western supply chain. And guess what? It doesn't pass muster in China either, because China now has a world-class battery industry that at battery level supplies everyone. THL supplies everybody. They are being held accountable to the Western standards. They are Western, from what I understand. They're amazing. The Chinese car makers are the global leaders. And I'm very vocal about it because I can. And I think this is the mistake, because you go about Africa, which is an amazing continent. I lived in Africa. I love Africa. You could do it right there, the same way I'm doing it right in Brazil. Go there, do it right. You can do low cost there and do it sustainable. Raise the bar. That's the point. Fill out the low cost supply, low cost end of the cost curve with high bar, high sustainability, high social standards, high human rights respect product, and you're going to cram it. That's the mindset. And then we're going to have a situation where all of the high cost guys will be out of business, which is not yet the case. So the price will be a function of where's the low cost product going to come from, but not just low cost, scale, low cost, sustainable. So that product is not going to make a dent in the cost curve because it will be banned from the cost curve. It is banned already. So ultimately, then you're left with how big is the gap that we need. But that product doesn't mean it's bad. It means that they just need to put some money into sustainability and they'll be brought back in. It's not like we don't want Africa. We love Africa. We just want sustainable Africa, lift the people Africa, climate goals Africa, because we have to be held to higher standards. So ultimately, you go out and you go to the high end of the cost curve. And this is the problem with the prices. If the low end of the cost curve doesn't deliver, you go find product in the high end of the cost curve because the low end of the cost curve isn't delivering enough. And then you go to lepidolite. Lepidolite is kind of this, we call reserve supply, right?
Hopefully in North America and Europe with government incentives and also support from customers who want to localize, and they're going to be vertically integrated downstream. Right now, they are definitely more costly than what's coming out of Brazil to China and Africa to China. So these things will have to evolve, but you're extremely well positioned given that you're in a remote area and you have great product. So you're naturally low cost. You haven't experienced the same cost inflation that other locations like Australia have. You know, you're at a 1.5 billion market cap. But when we've interviewed Pilbara, Dale Henderson, and Ken Brinsden in the past, I've called them like the Fortescue, which the new force in lithium, like the new force in iron ore. Fortescue is a $55-60 billion company, and Pilbara is like an 8 or 10 billion. So if they can 5-bag to, Fortescue, you could 5-bag to Pilbara. If you stay the course and become a Gina Reinhardt or Chris Ellison of Western Australia or Andrew Forrest, maybe you're 50 billion. The lithium industry is still young. It's growing very fast. And we've all been through booms and busts, and you've survived through the busts and thrived, and you're well positioned for the inevitable upturn. So really appreciate this very long, detailed conversation, Anna, and look forward to seeing you. I guess you're not going to be at Fast Markets, Anna, is that right?
I'll be on vacation with my children, but definitely going to see my partners there. We have a tough juggling act here. We're all parents and, global parenting is very tough. But I will be on vacation in a place that I've visited many times for business, and I have been dying to take my kids to, which is Japan, which a country I hugely admire. I'm going to have my friends from my days hosting me around. So we're so looking forward to it. But going back to the point of the growth, we are half the size of Pilbara today. We're not valued at half Pilbara. We're already there. It's a reality. So next year will be their size. They'll keep growing. Our example, the shining example is being Pilbara. And it's a very good example because we watch them build and we have enormous admiration for them. And we try to learn from their lessons. We felt them, we regard them like a trailblazer, meaning they, the same way we're trailblazers to everyone else in Lithium Valley. We took that example and they're in Australia and we're in Brazil and we're both independent. And so we're always going to be here, growing, thriving, doing what we do best. We both got the hang of it. They stay independent, I'll stay independent. Each one of us now different corners of the world. So we coexist beautifully and we think the same way because we're not integrated. By having these two large independent companies, Brazil and Australia are the workhorses of the iron ore industry globally. That's it. It's Vale over here, BHP and Rio over there. And this is how iron ore gets supplied. What we've done, we've taken iron ore to another level. We've taken iron ore to industrial steel making, if you will. Like what we do is industrialize because these critical materials, these future facing materials. So they bring industry to the country. So Australia is welcoming this reindustrialization of Australia on the back of future facing materials, transforming them, bringing those industrial jobs. In Brazil, we're just doing more of what we've always done, which is industries here, industries built here. Let's keep doing it. So it's an incredible moment to be in industry. And I feel like I spent my entire life preparing to be here. And we're doing a fine job. The key thing is to be humble, to always think about what can we be doing better, right? How can we get better and better? Learn from our mistakes, learn from others. And that's something we see in our peers in Australia, all of the greats, Gina, Chris, that crowd, Andrew Forrest. And that's what got them where they are. So yeah, they're older than me, but I look at them as they're humble, they listened, they pivoted, they kept going. And it's the same idea.
So thank you very much, Anna. You refer to, I often use LIFE, lithium and iron ore, as it's a wonderful life in Western Australia. It's a wonderful life in Brazil. And the analogy, I think, holds very strongly, and we'll keep promoting that. Thanks again, Anna.
Thank you, Howard. Thanks for having me.